Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. And thank you so much for checking out my show, where we have philosophical conversations about the economic, societal, and cultural implications of Bitcoin and the future of money. Please make sure that you're subscribed to the Bitcoin Matrix. And if you're watching this on YouTube, smash that like button so that more people see it. And put those notifications on so that you don't miss out on any fresh and new dope content. This episode with the CEO of Bitcoin Investment Group, Eric Weiss, the man who orange-pilled his best friend, Michael Saylor, gets into the progressive case for Bitcoin and how Bitcoin is something worth fighting for, is brought to you by River Financial. I'm able to produce this show in part thanks to my sponsors, and I'm very selective about who I work with and put in front of you. Set up zero-fee DCA with River. I love River because they are a Bitcoin-only company, and they make it simple to leave the next generation better off than our own, which is what it's all about. To get started and find out for yourself, use the link in the show notes and get up to $10,000 free when you buy Bitcoin and miners at river.com. Then get your sats off your exchange. My favorite hardware wallet is the Cold Card from CoinKite. It's definitely worth learning how to use it. You can also start by transferring your coins to a simple open dime. You can keep safe. You can get a 5% discount by using the referral link in the show notes. Bitcoin 2023 will be back in Miami Beach one more time. Education, celebration, and hyper Bitcoinization will once again be on the agenda. Join us May 18th to 20th and use the code MATRIX for 10% off your tickets. And now, let's enter the Bitcoin Matrix with Eric Weiss to hear his conviction, how he talks to family offices and high net worth individuals about Bitcoin and how to orange pill your friends. Honestly, this conversation with Eric was a really good time, and I hope you enjoy this rip as much as I did.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Eric Weiss is the CEO of Bitcoin Investment Group, founder and chief investment officer for Blockchain Investment Group, and the man who orange-pilled Michael Saylor. He began his career as a U.S. government bond trader at Morgan Stanley Dean Witter. Eric earned his MBA from Columbia Business School, joined the private equity and venture capital division of GE Capital as a director in the internet business space, served as director of investments at Internet Capital Group, and moved on to become founding principal at Stripes Group. He's formed a number of technology-based internet marketing companies focused on lead generation, search engine marketing, and social media. Eric Weiss, welcome to the Bitcoin Matrix podcast. How are you?
Thank you, Cedric. Thanks for having me. I'm well.
This is awesome. I'm excited to chat. Your background's impressive, but I'd like to go, and I'd like to get into that, but I'd like to go a little more further back. It seems like you come from quite an entrepreneurial family. And
I do. How did you know that? Yeah, I do.
I've done some research. But I'd love to hear maybe where it started, this entrepreneurial spirit, maybe with your grandparents?
Sure. Yeah. So my great-grandfather was the first in my family to come to this country, and he would go around to the dry cleaners and he would fix the equipment that they used in dry cleaning. And then when my grandfather, his son was about 10, 11 years old, he started going with his father to work. And my grandfather just kind of grew up helping out his dad. And then at one point, the dry cleaners back in those days used to hang pipes from the ceiling, and they would, push the clothes on hangers around the pipes. And so my grandfather, started asking a couple of these dry cleaners as he got older, hey, would it be helpful for you if I built something that moved the clothes around so you didn't have to, push them by hand? And he got enough responses that were positive from the dry cleaner. So he invented the conveyor that you see if you go to a dry cleaners today, where they push a button and your clothes come around. and he got the patent on that. We didn't have enough money to defend the patent on that, so there was some competition that we couldn't kind of, push away. But they still became the dominant player in that space. And then my father was the first person to come to the business, with any kind of formal education, and he kind of took it to the next level. And in addition to expanding that core business quite a bit, he also took the same technology to automating warehouses and robot picking. So a company like, Ford Motor or something that has a stock room with, thousands of pieces in it, you would, type the part number in the computer, and it would, go around to that spot, pick the part, put it on the conveyor, and then bring it back to the front. So sounds pretty basic to us now, but in the 80s and 90s, that was pretty big stuff. And then yeah, so I grew up with kind of that entrepreneurial vibe. My dad, in addition to being a great dad and kind of making all my sporting events and big things, he was working 7 days a week, and was gone from the time that I went to school in the morning. And we'd wait for him to come home for dinner, most nights if he was able to, and just got a real feel for the stress that an entrepreneur is under, and what real entrepreneurship is. And he subsequently retired, and has taught entrepreneurship at Columbia Business School for the last 20 plus years. And yeah, it was a really good education, good value system, and was very fortunate to grow up in a family like that.
Yeah, that sounds awesome. I think we're from the same neck of the woods. I grew up in New York, or outside of New
Yep.
York City in the suburbs. But I probably still exist, but I clearly remember going to dry cleaners over there, and you'd see the carousel, and that kind of fascinated me. But you hear about all this entrepreneurialism, and your dad taught at Columbia. So what was it like, growing up in an entrepreneurial family? Was it like, summers in Europe,
No, it was yeah. So by the way, when you see those conveyors, the majority of them are the brand White, WHIT, like the color, which is, my last name is Weiss, which is white in German. So that's where the name, that was the name of the company at the time. No, it wasn't like entrepreneurship is not particularly glamorous until you've become super successful. The reality is, my dad was personally on the hook for the company's debt, and that's what was needed to kind of go to the next level. And he took a lot of chances, and managing other family members coming into the business and trying to balance meritocracy and nepotism, and just a heck of a lot of stress. I mean, there's cyclicality in all business, and when you have a generational family business, you go through good times and bad times, and there were 600 plus employees, and I think maybe the biggest lesson I learned was, my father had a tremendous amount of integrity and cared a lot about people, and won all kinds of integrity and business awards, was on the cover of Inc. magazine as the best small company to work for in America at the time, where he provided kind of like free language lessons for people in the factories, helps them, helps the company, helps communication. It was just not viewing it as a job for folks, but viewing it as a livelihood and a life. And anytime any of his employees would go on vacation, that was super rewarding for him, that he was providing somebody a livelihood that would allow them to go on vacation or put their child through school or something like that. So I got a lot of good, very valuable lessons from that. But it was, don't get me wrong, we didn't grow up, broke by any means, but we certainly weren't like, there's no ballers.
Right. So did you think about going into the family business, and how did you end up being a bond trader?
Yeah, those two things are related. I did not want to go into the family business. When I graduated from undergrad, I was just really fascinated with Wall Street, and being in a manufacturing business in the United States was not appealing to me. It seemed that manufacturing was moving overseas, and it was just kind of, other than every business being exciting to me in the sense that it's business and there's always problems and you always have to figure them out, and winning, and that competitive spirit is important. There was nothing in particular about that business that I found particularly fascinating. So even though I had worked in the back of a factory every summer, for most of my life growing up. I told my dad I didn't want to go into the business, and that was kind of a big catalyst for him selling it. And yeah, I went to Wall Street, and my first job was on a liaison desk between the retail stockbrokers of the firm and the fixed income trading floor. And the reason that desk exists is because the traders don't have the time or patience to speak to the brokers who don't know the lingo, and have a little more time in their day than the trader who's like barking at people. So it was our job to kind of be on the phone and relay the information between one and the other. And it was a great first Wall Street job because you got the exposure of the sales side of things as well as the trading side of things, and was able to decide which one was for you. And for me, it was trading. It was kind of like playing a sport, the adrenaline rush and the feedback and the winning and losing. And so shortly after starting on that desk, I got pulled onto one of the government bond trading desk, and I traded U.S. government bonds with duration of 2 years or less.
Okay.
And after doing that for a few years, had a good run doing that. I looked around the trading floor, and there were not too many older people there. There were a lot of stressed out younger people. And I thought, this is fun, but there's not a lot of transferable skills here. I couldn't have gone and gotten another job very easily other than another trading job. So I thought, I need a pivot point. I need to, take a beat, acquire some more skills, some more credibility, and, see what's interesting to me. So that's when I, went to Columbia, and that was eye-opening. I got introduced to kind of the concept of venture capital and private equity, which for, all the perspectives on Twitter is not really, it wasn't then what it seems to be now. When I got into venture capital and private equity out of business school, there were only 4,500 people in the whole United States in that industry. So it was a really small little cottage kind of thing. And I started at GE Capital because they were the only private equity firm in the United States that had a training program. And they were also the largest, and the largest meant putting out $1 billion a year in capital, which by today's numbers would be like really small. So yeah, I started there, and I was focused on internet related businesses for the most part. This was late 90s. And I invested in a company called Internet Capital Group, ICG, which at the time was a high flying business to business internet kind of an investment firm. And we had an incredibly successful investment from GE's perspective in that I think we put in $9 million, and 10 months later took out over $600 million. The company went public and was the darling of Wall Street. It was the largest IPO of the year. And the folks at Internet Capital Group were having a blast. They were the most popular kids on the block. And they came to me and made me an offer that I truly couldn't refuse. I had no desire to move to Wayne, Pennsylvania, or Philadelphia, where I ended up moving. And I went there, I worked for ICG, and it was an unbelievable time. It really was. We were kind of flying all over the world, having meetings. I once flew to Switzerland from Philadelphia for a meeting in the airport, didn't leave the airport, and flew back home. It was just wild, wild times. We were the first people to have BlackBerries, and we'd be sitting there doing email at a table, and people were like, "What's that?" So it was just a really interesting time. But that also meant that you didn't get any sleep because we had people all over the world, and I was kind of on my BlackBerry 24/7. So it was a fun, stressful time. And then the internet bubble burst, and it became a lot less fun, and they didn't need deal people. So it was kind of on to the next thing. But I then started a firm called Stripes Group with one of the founders of Internet Capital Group in New York, and was kind of looking around at what was out there. And in 2013, I went to a conference, a Bitcoin conference in Miami, and instantly my mind was blown. It was not like Bitcoin conferences today, obviously. It was a bunch of people walking around, with t-shirts that said, "I can help you set up your Bitcoin wallet." And it was really, really very rudimentary kind of stages. But what really hit for me, and I don't know that I would have been able to articulate it this way at the time, but my previous job, we were really good at figuring out um, where the internet played an integral role and where it was BS. At the time, people were slapping a .com at the end of everything, right? It was like patiofurniture.com, right? And it was like, yeah, the internet doesn't play a role there. But for something like Amazon, selling books or whatever, that might be interesting. If you had a book on how to fix a 1967 Corvette, if you were trying to sell it on your street corner, the chances of someone walking by that needed that book was really low, and you'd have to sell it for a nickel. But the person who actually needs that book, if they could find it on the internet, that might be really valuable book to them, a lot more valuable than a bestseller. And it was situations like that where the internet was really effective for sharing information. So when I saw Bitcoin for the first time, the light bulb that went off for me was this was the first time that I saw the ability to transmit value safely and securely using the internet. And even better than that, party A didn't have to know or trust party B, and there was no third party C in the middle that both needed to agree on or trust. And I just thought, this is it. I got to get involved with this. There's something here. And I racked my brain for what can I do? I could start a directory online of companies that accept Bitcoin. Fortunately, that still wouldn't be a good business today. So it sure was in 2013. So the conclusion I came to was really just, I'm going to buy some Bitcoin. So I bought my first Bitcoin in December of 2013. And it was up 100%, down 50%, bouncing all around. And I'm like, what the hell is this? There was none of the traction we have today, literally nothing. It was just volatility, thinly traded kind of stuff. And so I said, I don't know what I'm doing. Maybe my conviction was, off here. And very unfortunately, I sold my Bitcoin in Q1 of 2014. I'm sure I made some profit that I thought was great at the time. And I have been stacking pretty much since 2016. And I'm still not back to as much Bitcoin as I had back then. So the moral and the lesson in there, as we've heard from so many people who got in early, is don't sell your Bitcoin. It can be very hard to get it back.
Yeah, I can imagine. And those kinds of stories are, I think, important to hear. I really thank you for sharing that story, because I think the honesty is compelling there. And I think there's a really strong lesson to be learned. It seems like, to me, throughout your career, two words come to mind: early and choices, or good choices. And I mean, there's a lot of blue chip stops on your resume. Columbia,
Thank you. Yeah.
GE Capital, ICG. These are all companies that, I think we're probably from around the same era.
Yep.
We're very exciting, dynamic places to be. Some are legendary. What was your experience like at Columbia, and how much do you value that time? And what would your be advice to maybe people now thinking about going to an MBA?
Yeah, there's a big movement now that education, formal education and higher education is not that important, and just go do something in the world. And to a large extent, I agree with that. I went to undergrad at the University of Maryland, and I had a fun experience, a good experience. But what I didn't get from that is I didn't get a network of individuals who went on to be super successful, folks with great careers. And my advice would be for those who are able or have the opportunity to go to a really well-respected educational institution. Yeah, you're going to be able to, how much you learn, I think, in those situations is going to be based on you and how much effort you put in to learn the material. But the network and the friends that you'll make will last you a lifetime. And it's the network that's really important. That's the key. So that's what I got out of that. And then honestly, like, as horrible as this is, it's true. You get a degree of credibility. Prior to going to business school, if I would have told somebody, said something to somebody where like, yeah, whatever, kid. And then all of a sudden, you graduate from, I think at the time Columbia was like ranked number two, but you graduate from a good business school and you say something, and all of a sudden people start listening to you a little bit. It was like, so that was kind of fun for a while.
Yeah. And you mentioned the choice of going from GE to ICG. And how much was your father involved in helping you think through some of these opportunities and debate the pros and cons?
My folks, both my mom and dad, have just been absolutely invaluable, tremendous resources. I don't think I've ever made a major life decision of any kind without, consulting them. That particular decision was really easy. GE Capital was a great place to learn and be from, but Jack Welch, who was running GE at the time, didn't believe that he should pay his private equity group compensation that was commensurate with what the industry paid. So, when the decision came to leave that job, I went to the individual that headed my department, to tell him that I was going to be leaving to go to ICG. And there were probably 1, 2, 3 layers of management between us. And, this guy, John Malfatone, and he said to me, Eric, man, I hate to see you go. Is there anything that I could offer you to stay? How much money, whatever. And I wasn't being a dick at all, but what I said to him was, John, even if you offered me your job, I would have to take this. And he's like, that much, huh? And I was like, that much. It was just, on paper, which never happened, I was probably wealthier than I am now. It was a lot of stock and great cash comp. And I did get kind of the you made the right decision kind of feedback when the individual at GE Capital to whom all of GE Equity, their private equity firm, reported to, left GE to come join Internet Capital Group as our COO, a person whose signature was required on any deal I did that I'd met like once in my life at GE. Then next thing you know, I'm hanging out with him every day discussing deals and stuff. So, based on the people I was interacting with once I got to ICG, that was the proof that it was the right call.
Right. ICG, was that Barry Diller?
No, that was a guy named Walter Buckley and Ken Fox out of the Safeguard Scientific Group.
So what was the experience like there with the internet boom, and what kind of lessons did you learn about sort of that, almost like rack them up and then the crunch and then everything going on, and how'd you kind of look at different things and projects?
I think more than anything, what I learned from that time was I learned about people. We were kind of the darlings of the world for a quick minute there, and there wasn't any CEO of any company anywhere, no matter how big or small, who wasn't interested in having a meeting with you. You were the guys who were the experts on this internet thing and how it affects business, and they all wanted to know. Even if they weren't interested in doing a deal with you or partnering anyway, they wanted to pick your brain. And we met some very interesting people. And what I found was kind of the more successful the folks you were interacting with, the more humble and nice and genuine they were, and how glaring it is when you bump into an exception to that rule and you sit in the, conference room or the office of a real jerk. And just, it was in those moments that I was kind of thinking, if I'm ever actually really successful, I'm not going to be one of these assholes. I learned a lot about people in that. When everybody wants a piece of you and wants to talk to you, it's really interesting to see, what kinds of personalities are effective and not effective.
Right. And so then what happened in 2016 where you turned your attention back to Bitcoin?
2016, I was, the entire crypto world was kind of heating up, and I had a lot of friends who kind of knew that I was a part of the space. I was the only one that they'd ever heard mention it. So friends were reaching out and wanted to know, and I was kind of educating my friends on it and talking about it. And I myself was buying again, and was really just amazing to see kind of the traction it was getting, and not just traction like publicity, real news outlets, and people were talking about it. It was, it wasn't just some funny internet money that a couple of, nerdy, folks were talking about. Like the financial world was starting to take interest in talking about it. So that was really interesting. And I was stacking and educating friends And I just thought, I'd like to do something in this space. And it was kind of around that time, that I started mentioning it on a pretty regular basis to Michael. I'd mentioned it in the past, and it was not something that was on his radar, which is understandable. He's running a company with a couple thousand people, and he's fighting it out against the companies like Salesforce and Microsoft every day. And this internet money didn't come close to being a priority for him. And it wasn't until the government went crazy and started printing ungodly amounts of currency that everybody, including traditional business folks, anybody with cash on the balance sheet, was concerned about the purchasing power of their currency.
Right. And so what were these conversations like over time, especially more so in the beginning? If you did bring up Bitcoin in 2013, or he famously tweeted about it, I think, in 2013. What would be his reaction to you then? I know he was busy, but like, how would he get out of it or throw you off?
At one point, the advice he gave me was, you've worked a long time in Wall Street. You've got a great reputation. You should really think twice about getting into something like this. This stuff has a reputation for being used by criminals. Maybe you shouldn't do this. And I have tremendous respect for Michael. People are always very curious about what it's like to be Michael's friend. And, what I tell folks is the best thing is access to the supercomputer, the brain for anything that's going on in your life. And I think the best thing about Michael getting into Bitcoin are the podcasts that he does, and the fact that now that intellect, which used to be reserved for folks in his inner circle, so to speak, is now shared with the world, and that everybody gets to hear the way he articulates things and explains things and understands things, which is phenomenal. But in the early days, he was really dismissive of it, sometimes more politely than others, because I was pretty persistent, as all of us who like Bitcoin are. And during the pandemic quarantine, we were both in Miami, and the accommodations at his place are a lot more comfortable than the accommodations at my place. So we were spending a lot of time sitting outside by his pool, talking about stuff, trying to make sense of what was going on in the world. And he remembers that I said something like, and I remember this too, I said something along the lines of, anytime there's a paradigm shift like this, there's opportunity. And we just need to, find out where that opportunity is. And then I think I didn't make the connection between that prior comment and what I brought up soon after or immediately after, which was Bitcoin, but he did. And so this time when I brought up Bitcoin, instead of dismissing me and moving on to, the next or a different topic, he said, okay, tell me more about this Bitcoin. And, I was a little shocked, but proceeded to go down the rabbit hole as far as I was capable, which I thought was a lot at the time. But when you talk to Michael and he starts asking really intelligent, probing questions, you realize that you don't know as much as you thought you knew or should know, maybe. And so after, I don't know, maybe a week or so of talking about Bitcoin kind of every day, he said, so, where would I go if I wanted to learn more? And I pointed him to some podcasts and, some books and stuff. And he devoured that. And then, we would continue to talk about it the whole time. And, and then it was, and if I wanted to buy some of this stuff, how would I go about doing that? And I was pretty well plugged in at the time. So I set him up with the right folks at the right places. And, then one day, I was in Miami and I was in my car pulling into a restaurant to meet some friends for dinner, and the phone rings, and it's Michael, who will usually text, not call. So I thought, oh shit, So I answer it, and he says, well, I bought some Bitcoin. And I said, okay, good, congrats. And he said, yeah, 10,000. And at the time, Bitcoin was almost exactly $10,000, per BTC. So I was like, you bought one Bitcoin, dude? And he goes, no, Eric, I bought 10,000 Bitcoin. It's first trade, $100 million personally. And so if you've been in Bitcoin for a while, you know that it ain't a straight line. And so my first thought was, oh shit, my friend just bought $100 million worth of Bitcoin. I better hope this works out, or, maybe I better caution him a little bit. But, he's, as the world now knows, he does really deep research and has really strong conviction. And that was just the beginning.
Right.
What I didn't know is I didn't know what was going on at the corporate level. And I didn't know that he had wanted to buy it for his company, and the $500 million they had on their balance sheet. And that there was a process ongoing for him to be able to do that for MicroStrategy. And it was in the interim that he bought it personally.
Right. Wow, that's wild. It
Yeah,
sounds like
it
you
was
guys have
pretty wild.
a really special relationship. You've been friends a long time, and it seems like you guys are on the same page with where you are in life. And even a lot of close friends don't get a week together,
Yep.
even during COVID lockdown. And I'm really curious because I've had Michael on the show,
Yep.
and his brain is powerful and beyond fascinating. His ability to articulate what he's thinking about is incredible. And I think we
Incredible.
spoke for a couple hours, and I maybe asked a couple of questions. He's able to
That's
give
all you got in.
high signal for a long period of time and well delivered. So what were those conversations like, if you can remember back to that week? I mean, especially around, he's finally says, okay, tell me more. Like, where do we even start? Like, now that he's listening, do you start with
It was
monetary policy? Do you start with the technology, the cryptography? I mean, are we worried about going too hard, too fast, and him being like, okay, I've had enough,
no,
let's stop?
no. With Michael, you're never worried about going too hard, too fast. He's as you know, he's already processed what you said, and he's 5 steps ahead. So it was just kind of, hard cap, trying to get over, that hurdle of, what's with this anonymous founder, who the hell is Satoshi? This is shrouded in secrecy. Why is this shrouded in secrecy? This is dubious, that kind of stuff. And then some, I'm not real big on the technical side, but kind of, mining, et cetera. And it was, in those early conversations that I realized I understood mining conceptually, but I wasn't even capable of answering the questions that he was asking about mining. And the questions he was asking were pretty deep questions, like I don't recall the details, but he's probably asking me like what kind of hash, and I'm like, I don't fucking know what kind of hash, dude. It never occurred to me to, but as a technology guy, he knows these things, so he's drilling into this stuff, and I'm like, I don't know, and I'm like Googling while I'm talking to him to try to come up with more answers. But no, it was started high level and just digging deeper and deeper, and it was really humbling because at the end of this couple week period, by the time he had purchased Bitcoin, the student had become the teacher. It's like I was already asking him, but he retains things better than most people.
So then what did you think when MicroStrategy announced the corporate treasury announcement and putting Bitcoin on the balance sheet? What was your reaction to that?
I thought it was absolutely incredible because I thought it gave Bitcoin exactly what Bitcoin needed, which was credibility. And that was a really hard thing because you could have high profile, affluent, well respected people say, yeah, I bought a bunch of Bitcoin. But you don't know that they're telling the truth. But when you're a publicly traded company and the CEO of a public company, you can't lie. So, when a United States based publicly traded company on the NASDAQ says they bought $1 billion or $250 million worth of Bitcoin, $1 billion worth of Bitcoin, it's real. And there's a forcing function there where now all of a sudden accounting, has to deal with this. And now all of a sudden it matters a whole hell of a lot whether or not Bitcoin is a commodity or a security. So it brought all of these issues to the fore, right? Because there's 40 Company Acts where if you're going to hold securities as a publicly traded company, there's a whole different level of compliance and obligations than if you're going to hold a commodity. So, it was key that it was Bitcoin and Bitcoin only. and it was key to drive a lot of things. And I think that's why FASB and the accounting board kind of had to really start taking a look at this for the first time and decide that maybe fair market value accounting was the appropriate thing for Bitcoin, because the way accounting was set up for anybody who was forced to comply with GAAP accounting was super vicious. You had to mark the Bitcoin down if it went down at any time during the quarter, but you couldn't mark it back up when it went up.
Mhm.
And even worse, you didn't get to break it out separately in your accounting like you would an investment asset at a corporate level and say, oh, this loss was created due to, this, investment in this thing. It appeared like it was from operations, like your company lost money. So in MicroStrategy's case, okay, if it's going to be core to your business, investors might take the time to look through and parse, oh, that was related to Bitcoin loss. The underlying business is doing fine. But if you're Apple and you've got $60 billion on the balance sheet and you decided to buy $5 billion worth of Bitcoin and it went down and you missed earnings or something because of a drop in Bitcoin, how many people are going to parse your, financials to say, oh, it was Bitcoin related? Because you can't break it out separate. So what this fair market value accounting will do is it will eliminate that. Things get marked down, but they can also get marked back up, and they'll, FASB will decide on what kind of schedule. Is it quarterly? Is it annual? Whatever it is, but at least there'll be something that people understand. And most importantly, it'll be broken out from operations,
Right.
below the line, as they call it.
Yeah, I mean,
So that's
especially
a big deal.
someone with a corporate accounting background. I mean, it made it brutal for corporations to hodl.
Brutal.
Almost as brutal as it became for retail people in retail to spend a little Bitcoin because of tax implications.
Correct.
So two things that are just really holding Bitcoin adoption back in various ways. So I'd love to hear about Bitcoin Investment Group and the journey there.
Sure.
So
Sure.
maybe you could tell us a little bit about the fund and how you got it started and what the clients are like.
Sure. The clients are primarily family offices, which for those that don't know are kind of like, in most cases, generational wealth, or just enough wealth in a family that they've hired professionals exclusively to work for their family and manage their wealth. So it's a great job for people out of the financial world to go manage a particular family office's money. And those are our primary clients. And when I formed Bitcoin Investment Group, I had a couple goals. One was I wanted family offices to be able to invest in Bitcoin in a way that was comfortable for them. I get the whole not your keys, not your coins kind of thing, but the truth of the matter is that 75-year-old matriarch or patriarch billionaire doesn't want to hodl their own keys and worry about their private keys and stuff. They just don't, and they're also not particularly comfortable custodying at I won't tarnish anyone's name and list any of the crypto related exchanges, but they're not particularly comfortable custodying at a name that they don't know, that's not a household name. So that was one component of it. So they don't want to custody the stuff. They want a trusted custodian. They don't want the risk of technological obsolescence. They don't want some hard drive that they're going to lose or that's not going to be compatible with the next computer they get to plug it into, or if they die, they don't want the Bitcoin being lost forever kind of stuff. And these are real concerns. But by the same token, I thought it was essential that the most important thing about Bitcoin, as we all know, is that you ultimately be able to take possession of your own Bitcoin, that the bearer asset piece of it, right? And there weren't any funds that did it then. I still don't think there are any that do it now, but our fund has a pretty unique wrinkle, a couple of them, but one unique wrinkle is that when an investor leaves the fund, they have the option to go back to US dollars. So we'll sell their Bitcoin and send them US dollars, or if they like, they can exit in Bitcoin and provide us an address if they become comfortable, taking possession of their own Bitcoin, and we'll send them their Bitcoin. And the other cool thing is that in most cases represents an in-kind transfer and doesn't create a taxable event if they take the Bitcoin. So a couple of the cool features the fund is, number one, we custody our Bitcoin with Fidelity Digital Assets, which is part of Fidelity. And that is a household name that most family offices are very familiar with, $13 trillion asset management firm. And the woman, Abigail Johnson, who is not only the heir, but also the CEO, is a big Bitcoiner herself. And that's why they're as prominent as they are in the space. And they've thought extensively about the safety of their custody. So my Bitcoin's there, my client's Bitcoin are there. I'm very comfortable with that piece. I only charge 1% a year. That's it. No other fees or expenses. So I don't make, a heck of a lot of money off the thing. And out of that 1%, I eat all the other expenses, accounting and custody, et cetera. So it's not a big money maker, but I think it's a good product. And you can take advantage of some tax things as well. I pay a lot of money for our third party administrator to do accounting for each individual account separately, so that their tax lot isn't affected by others in the fund buying or selling, which is another cool kind of feature. And then also from a tax point of view and regulatory point of view, when you get your IRS form at the end of the year and on the front page, it says, did you invest in cryptocurrency? If you invested in Bitcoin Investment Group, the answer is no, you did not. You invested in the fund. So at the end of the year, they'll receive a K1, just like the majority of their other investments. And, they'll just submit that with their taxes. And it's only if they ever want their Bitcoin that it becomes Bitcoin.
Right. Yeah, I think the relationship with Fidelity is really interesting. I mean, they do go way back with Bitcoin. This concept, thinking about trust, they are, I think, the most trusted institution you could think of, with several trillion, dollars under assets under management. Yep. I think they've done it for a few hundred years at least.
Sorry, go ahead.
No,
super credible. They're super credible, and they take this space really seriously. Abigail Johnson personally, is involved, and for a business that relative to Fidelity is not large, she spends a good deal of her time personally on this one. So
yeah, she's out in front of it. They've been mining things since 2015. She's spoken always enthusiastically about it. I always forget, or I didn't realize she's an heir, which I think is actually really interesting here, that it really puts the family behind this. And you think about, really big money thinking long term. And it seems to be there. What is the relationship with Signature? I think
Signature so Signature, Fidelity is not a bank, so you can't wire the money directly into Fidelity. We have to have a traditional US banking relationship. And at the time that we opened our account with Signature, we were the first crypto related account that they had. And it's since become about 20% of their business or more. And they're a big bank, like in over $80 billion in AUM. So that was fun. We got to be a little bit of a pioneer there. But really, the fund itself, it's really interesting to hear the perspectives of family offices. That's kind of the coolest part of my job, because these folks have tremendous resources. They know all kinds of very influential, well-connected people, whether it's in finance, government, business, super impressive people with lots of resources. And to hear them thinking about Bitcoin for the right reasons is really cool. So, I kind of educate them, and the family offices probably break into a few different categories. Those that are kind of like the most forward-looking, most advanced, they've been on this, with us kind of early on, and they understand how beneficial it is for tax purposes relative to maybe real estate or something like that. There's a lot more flexibility for generational wealth, for, passing money down for, hundreds of years. And they have great questions, and they're really focused on that aspect of it. Others will come and say, hey, my son, daughter, grandchild has been talking about this, and now it's showing up in every newspaper that I respect and read, and on CNBC. So I guess it's a thing, and I got to learn about it, get me from A to B. So we talk to those. And then there's others that, still don't get it. I think, one guy recently told me, he said, I saw it in my grandfather, I saw it in my father, I saw it in my uncle. There comes a point in your life when you're just not going to put in the effort to understand the new technology, and you just know you're not going to do it. And he said, that's where it is for me. And I'm just not going to do it. What do you say to that? Okay. you know. But it's interesting to see kind of the different ways family offices are thinking about it. And what's really exciting is over the last few years, they really are kind of moving very significantly positively towards us.
Yeah, let's dig into
great.
let's dig into it some more. I think it's a really interesting topic to explore. So, how do you explain inflation to someone either representing the family office or high net worth
Yep.
individual in that family? How do you deal with that? How do you explain it to them?
Yeah, if you're dealing with the professionals that work for them, it's not that difficult because they've got pretty extensive finance backgrounds and they get it. If you're dealing with the matriarch or patriarch and you're kind of, the easiest way I think is just as it relates to money supply. Everybody gets it really quickly. And I'll use a ridiculous example usually where I'll say, okay, let's pretend it was, they live in New York City or something. And you say, let's say that there was a bubble around New York City and nothing and no one in or out. And then overnight, all the money doubled. So if you had $10 in the bank, when you woke up in the morning, you had $20 in the bank. Yesterday, before this happened, you went to your favorite restaurant and your favorite dish was $30. When you go back today, now that all the money's doubled, how much do you think they're going to charge for that entree? And, you may get a specific answer, but generally the answer you're going to get is somewhere between $30 and $60. And you're like, okay, you get it. And then, if they're really aware, it clicks instantly because they know what's happened to money supply in the last couple of years. And if not, you let them know, do you realize that, money supply in the US went from 13 trillion to 25 trillion in, 24 months, and their jaw drops. And now all of a sudden they understand why there's inflation, and it's not the BS they're hearing from whoever the current administration is or the Fed or anybody else. It's just that you printed a crap ton of money, and pretty much everything government does is inflationary, right? Whether it's wars or taxation or anything else. But yeah, and then it usually clicks for them. And then you can go as deep as they want on how the fact that this has happened since the beginning of time. And, when you ask them if they think the government is ever going to stop printing money or if this is going to come to an end, they all have the same opinion. Everybody, except politicians, live in reality, and we all know it's not going to stop. And so then all of a sudden, when they think about it in that context, they go, holy crap, we need something to fight this inflation. The other example that I give is really, I use, one of Saylor's home in Miami. He purchased so he's got a deed of sale on the wall in his house from about 93 years ago, I think it was. And that house sold for $100,000. And that house now, today, less than 100 years later, Zillow would tell you it's worth 40 million. So how much value has the dollar lost? If the matriarch, when she sold that home, would have taken that $100,000 and put it in a safe deposit box for her great grandchildren, they would have $100,000 today. If they had the home, they'd have 40 million. So what's that? 80x, right? So it's lost like 90% of its value.
Yeah, I mean, I use a very similar example. I try to talk about a savings technology, and I'll say if I want to give my future grandchildren $100, and right now I can buy them about 25 gallons of gas, and I put that in my pocket and I keep it for 40 years and I hand it to them. Like, kids gonna be like, Grandpa, you're a schmuck. Like, this now buys me like 1 gallon of gas. Like, you're the biggest idiot on the block. Like, why didn't you do something with this? And And there's nothing that you can use as a tool to get that $100 forward. And Saylor goes over this really well, but to move money through time, not just space, and not be debased, and not to take
Exactly right.
business risk or any other kind of risk, just to move the money forward. What other, I'm really curious I'm assuming you get volatility as pushback from family
I did.
offices, and whether it's older family offices or even younger ones, maybe inherit a lot of money or made a lot of money. Like, how do you
So,
respond to that?
so the examples that you and I just talked about with inflation, if you're having that conversation with wealthy people in the United States, that's a very different conversation than if you're having it with a family office in South America. If you're speaking to a family office in Argentina, you don't need to tell them what inflation is, right? And they don't give a rat's ass about the volatility. They don't care about the volatility. They want something that's going to be here tomorrow and not go to zero. So I think there are degrees of caring about the volatility. I had a professor at Columbia who had, my favorite line was from all of business school, is he said, if you've got blood on your collar, your dry cleaning is the least of your concerns, right? So if you're in the United States, maybe you don't quite get it yet. You've gotten it more in the last 2 years than you ever did prior, but maybe it just hasn't sunk in for you yet. If you're in Turkey or Argentina or Sri Lanka or, Iran, all of a sudden you're like, anything, right? Lebanon. I mean, and what are there's like 180 currencies out there roughly, I think. How many of those currencies do you think are going to be here in 50 years? It's not going to be 180. It's not going to be 80, I don't think. So ultimately, I think there'll be a handful of currencies. I don't know, maybe dollar, Chinese yuan, euro if it sticks around, maybe a couple others, but they're going away. And when they go away, they leave massive destruction in their wake. And, I think about what Warren Buffett said, which I thought was, I have great respect for Warren Buffett, but it was really just a disingenuous, horrible thing that he said when one of the CNBC people asked him, what should people do, in inflationary environment? How do they combat that? And he said, you just got to be really good at what you do. Make sure you're great at whatever your profession is. You could be the best freaking heart surgeon in Venezuela, but it is not going to help if the money that you got paid today is worthless tomorrow. So you need to have financial education and be able to store your money in Bitcoin or something like it. The other beautiful thing about Bitcoin for storing your money, so rich people have other ways to do it too, right? Rich people can buy assets that will inflate with inflation, scarce assets, houses, stocks, things of that nature. If you're working paycheck to paycheck, there's nothing, that small that you could buy that might help you. You might have money from day to day, week to week, month to month, but it's savings account kind of money. You leave your money in a savings account, you're screwed. But if you can store your money in kind of Bitcoin in a savings account, you're going to get some protection there. And so I really think that that's where Bitcoin's greatest strength is.
Yeah, I definitely echo that. I do want to think a little bit about family offices, high net worth individuals, and something that kind of just I think about a bit is, it seems, I think you've said something like, retail is scared at 16,000. They were excited and confident at like 50,000. And,
Yeah.
and I think a lot about Michael and his Michael Saylor and his issue with a $500 million melting ice cube. And I think about the uniqueness of that problem compared to the melting ice cube of the person who has a very small ice cube in an undeveloped country, and they're trying to grok inflation in their country versus the dollar versus this new technology. And I almost feel like, $500 million melting ice cubes gives you the advantage to understand this problem.
It's more dramatic.
It's more dramatic.
Not so subtle, yeah.
Yeah, I'm employing 2,000 people a year to make 50 million a year, and it's going to evaporate like that just by sitting on the reserve. What do I do?
Right.
But I think there's this like inflection point where it goes from defense to offense, where you could say, okay, I'm one of the 1,000 richest people in the world, And if I do what I'm doing, I'm going to maybe get to like 500 or 600. And that's, but if I put it all in Bitcoin, I YOLO to 1 or 2 or 3 or 4. And I think that I would think that at some point family offices would start seeing this as that asymmetric bet.
I
Even
haven't
companies
seen,
and countries.
yeah, countries for sure.
And I think it's the good
Countries
part of
that can
greed.
print their own money for sure. If you're a country that can print your own money, why are you not printing off $500 billion or whatever your crappy currency is and buying Bitcoin with it and moving to a Bitcoin standard? And you don't even have to be a country. You could be a municipality. You could be a town or a state or whatever. For the life of me, I don't understand why that's happening, but I think it will. And whoever does it first is going to have a massive first mover advantage. Um, that most of the family office clients that we have are conservative by nature. Can't generalize like this, and I can think of specific examples in my head where I've kind of made this assumption and they've told me directly that I'm incorrect. But generally speaking, I think most are in the stay rich game, not the get rich game. But I was told very directly by one family office client that is not true at all, that every one of his dollars is there to make more money. So that was humbling for me as well as eye-opening. But so yeah, there are the more aggressive ones that are looking to gain and grow and get huge. But by and large, I think it starts off the way it starts for most people, which is, okay, there may be something here. Let me get a little toehold. Once they're invested, once they get off zero, they start paying attention to it a little more. And when the more you pay attention to it, the more you learn, the bigger your investment, the greater your commitment. And we all know that there's that moment that we all hit where you go from maybe thinking about your investment in Bitcoin to that epiphany of, oh shit, I don't have enough, right? And the same is true for family office folks. And slowly but surely, some are coming to the conclusion that they don't have enough. But they're still retail investors. They're still people. They're still human nature, and they're still human emotion. And Bitcoin is a little different than other financial assets in the sense that, let's take a family that made their money in real estate, for example. They're very wedded to cap rates and cash flows and paying multiples on things, right? There's ways that they value things. And Bitcoin is not that, right? There's no discounted cash flow that you can run on Bitcoin. There's no PE multiple or revenue multiple. There's not that thing. So when it comes down in price, there's nothing to say for them, well, I still got conviction and a price target of this. I still view it this way. It's not like, well, it was trading at a 30p and now it's a 15p. So I can buy with some conviction here. So it doesn't have those financial metrics that the assets they're used to have. So it's a little harder for them to have conviction on the downs.
Yeah, I could see that. What about when they throw at you, are there any genuine threats to Bitcoin? Can Bitcoin still fail?
Yeah, you get that a lot. You get that a lot in the early days. And it's just a matter of educating. There's two versions of that question, right? There's the genuinely inquisitive version where they're asking out of curiosity to learn. And there's I've heard this somewhere, I'm a dyed-in-wool hater of this, and I'm not interested in what the real answer is. And you can tell which one it is pretty quickly. But I'm happy to take as much time and answer as many questions as they have, to get them the comfort they need, point them to other resources so it's not just coming from one source. I'll give them a Saylor podcast or, Safedine book or something, and, different articles on, ESG FUD and bullshit or whatever. And you just kind of keep staying the course. Because I think at the end of the day, you don't orange pill someone as much as they may orange pill themselves. Because with Bitcoin, as we know, if you don't do the work, if you don't really put in the work yourself, you just can't. It's very, very difficult to have the conviction that you need to hodl through these early years if you haven't done the work and don't have your conviction. It's like getting a tip on a stock from someone. If a buddy tells you, oh, you should buy this stock, it's going to do great, blah, 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 and you go buy it and it goes up, it goes down, you don't know, you have no conviction. You're going on what a friend said. But if you spent, 3 months doing research on that company and you knew that the pipeline of customers was strong and and you understood the anomaly of why this went down and you had conviction to buy more here. It's a very different thing when you do the research yourself versus just kind of, going along with what you think is a get rich quick thing.
Yeah, I agree 100%. I mean, that's why I put in the work I do, and then I put that into the show, and that's why I think talking to people during the bear market is important. It's just, I think the real opportunity is to have that conviction going into the bear market, or have it forged in the bear market and come out of it with conviction, more so than maybe in a bull market. What do you make of Bitcoin's correlation to equities, and how do you explain that to clients?
Yeah, it's become a bit of a self-fulfilling prophecy. So one of the big things that's reinforced this correlation is large hedge funds are using it as a hedging tool. So, for example, let's say Bitcoin is heavily correlated to big tech, or has been. It's breaking maybe a little bit now, we'll see. But it had a beta of like roughly 3. And so what that means is for every 1% that big tech either goes up or down, Bitcoin will go 3% in the same direction. So if you were a hedge fund and you had $1 billion invested in big tech, right? And you were afraid that big tech was going to go down, but you didn't want to sell those positions for a whole host of reasons. Maybe you're tax planning, you didn't want to take the gains, blah, 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 whatever. And you say, but I want to hedge. I want to be protected if, this takes a big hit. What do? Well, if you could short Bitcoin in that scenario, and Bitcoin, went down, for every 1% Bitcoin stocks went down, Bitcoin went down 4, you could hedge $1 billion of exposure with a $250 million short. So it was really effective for these hedge funds. And when you have that mechanism in place on both sides, and the hedge funds are reinforcing it with billions of dollars, it reinforces the correlation. So, now that involves shorting Bitcoin, which kind of brings us into everything that's happened in this bear market, where a lot of these companies that have blown up, a lot of these projects that have blown up were brought about because people were lending their Bitcoin to generate yield, right? And so what was the use of that Bitcoin that they were lending? By and large, that Bitcoin was being given to people who wanted to short Bitcoin. So you put your, 10 Bitcoin into a product because you think you're going to get some yield. The guys you gave your Bitcoin turn around and loan your Bitcoin out for a fee to a hedge fund that wants to short your Bitcoin. They go and sell it in the marketplace, driving the price down, right? And they're trying to profit off. So all of this deleveraging of the industry and all these guys blowing up, that's actually really good because people are not loaning out their Bitcoin for yield so much anymore. And we see that in all the Bitcoin that's coming off the exchanges. So if there's less Bitcoin out there to be shorted, that's great for us in general. And for any that don't know it, unlike a stock that you can kind of short without owning the stock, you can't sell Bitcoin unless you own Bitcoin, right? Like how would that look in a block of a transaction? You can't have a sale where somebody's not, selling the Bitcoin. So they've got to borrow it in order to sell it. So if we're not giving these institutions our Bitcoin for yields to make, a little bit of interest on it, then they don't have the Bitcoin to lend out to the hedge funds to short it.
Right. That makes a lot of sense.
Which bodes well for us going forward.
Yeah, I agree. So then what are family offices and high net worth individuals that are, whether they're allocated or not, thinking about allocated or not, like what was their reaction to FTX?
FTX was tough. It painted the whole industry with a bad, it was a black eye for the industry, right? Sam did a very good job of selling himself to the most credible institutions and most credible people as a do-gooder, right? This was a guy who, in my opinion, was running what was a scam, and he splashed a lot of money around to gain himself credibility from influential, respected people. And that hurt us a lot because the industry was just gaining trust among institutions and, banks, et cetera, right? Custodying Bitcoin and things like that. And this just hurt that trust and it set us back a bit. I do think, and I've been really impressed with both investors and the media in separating Bitcoin from the rest in this context, right? Even now, when we look at some of the more recent negative announcements in the industry, whether it's a Bitcoin miner declaring bankruptcy or, somebody like Genesis and their issues, it's not hurting the price of Bitcoin anymore, which I think is great. I think people are starting to understand that SAM and FTX represent centralization and financial fraud, and Bitcoin is at the opposite end of that spectrum and decentralization. So I think the narrative is getting more nuanced and better, and people are starting to understand.
Yeah, I kind of want to ask you. It's not a personal question, but like, not does justice get served, but how does justice get served in a situation like that? Can it be served?
No, it can't be served. In my opinion, I think it's a awful situation. There were about 70,000 Bitcoin on FTX that people thought they owned. Those Bitcoin are not there. And maybe they never were, or if they were sold. So that's particularly evil because, number one, those people may not have the money to rebuy their Bitcoin now. Number two, he screwed Bitcoin because there was 70,000 more Bitcoin afloat, which I think is roughly like 25% of an entire year's, new supply. So the float was greater than should be. That should have been 70,000 Bitcoin that was out of circulation. And he just did like really serious financial damage to up to 1 million people and hurt an entire industry. It's super fucking evil. And he showed no remorse. He's tried to suggest that he's just kind of some hapless businessman who made a mistake, which in my opinion is a total crock of shit.
Yeah, I agree with everything you said there.
One more thing to add to answer your question more specifically, nothing negative happening to Sam helps the people that got hurt. So like what justice can be served is his incarceration doesn't put those 70,000 Bitcoin back into people's wallets, right? So yeah, I hope he gets what he deserves. But it doesn't make the people who the aggrieved party whole.
Right. Yeah, I can see that. It's a very frustrating situation. Do you think there's a strong progressive or liberal case for Bitcoin?
I think it's stronger than the conservative rich person case. I really do. The majority of the world is unbanked. They don't have any way to save their wages, and their wages are getting inflated away. But most of them have an Android phone or could easily have an Android phone. And if you were in Africa and you were storing your rapidly inflating currency under your bed and it was getting stolen by friends or family, or literally just being stolen by robbers, you can't do anything about it. But if you could keep it on your phone and nobody could steal it, then yeah, that's massive. You're banking the unbanked. You're protecting people against inflation. And, the progressives will say that this is what they stand for. But I think by and large, politicians are only in favor of solutions to the problems that they care about if they're their solutions.
Right. I can see that too. Do you think we've passed Bitcoin's event horizon yet?
There are lots of event horizons. We've passed a lot of awesome event horizons that I had only hoped that we would pass. So many. I mean, being deemed a commodity is massive, in my opinion. getting fair market value accounting is massive. And probably the biggest is regulators in the United States embracing Bitcoin from both sides of the aisle and understanding a lot of the benefits of it and wanting to regulate, Bitcoin in a pragmatic way. I think when I first started in this space and started the fund, the questions that I got were mostly around, is the U.S. government going to ban this? So that's a massive event horizon that I think we passed. But there are many, many, many more to come, and hopefully we'll pass some of those soon.
Right. What does the world look like to you if Bitcoin doesn't win?
Yeah, that's a good question. I mean, I don't want to speak for Michael, but I think he and I are, of the same belief that you kind of have to stand for something in life. And Bitcoin is something that he and I both agree is worth fighting for. If you believe in freedom, if you believe in truth, if you believe in, individual sovereignty, um, I haven't seen another solution. I'd be open to other things that work as well, but Bitcoin really is hope, and in what seems to be a relatively hopeless predicament for all of us. So I hope it succeeds. It's worth fighting for, and I'll keep doing what I can, um, to share the view and the belief and help educate a little bit. But yeah, I don't know what happens if it doesn't.
Right. Were you surprised to see Bitcoin go below the highs from 2017?
No, not at all. I I would have I had great conviction that Bitcoin would see, you know, 50, 60, percent drawdowns. I just wouldn't be able to tell you if it happens at 60,000 or 160,000.
Right. What do you think your dad would make of your relationship with Bitcoin?
My dad's an investor in Bitcoin Investment Group. He's a big proponent of it. He gets it. My 102-year-old grandmother kind of gets it. She's always asking me how the Bitcoin's doing. So yeah, I think my dad, he gets it. He understands the moral and ethical benefits of Bitcoin. He understands inflation and why it's such a pernicious, evil thing for people. Money being inflated away, and he's invested in it. He's optimistic, and he's a believer. I think initially he started out just kind of like wanting to, be supportive of his son, but he gets it now.
Yeah, my 81-year-old mother, she gets it. And it's kind
That's
of
awesome.
wild. And she roots for it. Do you think, going back to something you said earlier about like why wouldn't a nation just print their fiat to buy Bitcoin? Do you think it's possible a nation is wasting fiat to short Bitcoin and suppress the price? Do you think that's a greater than non-zero chance?
I think it's highly unlikely.
Fair
Highly
enough.
unlikely. I mean, maybe as a trade, if they thought they could manipulate it and make some money for a short-term trade, but I don't think that anyone's doing it, on a moral or ethical kind of basis. And I think most countries right now have much bigger problems.
Right. Do you think the US is going to have a CBDC?
I think that CBDCs are going to be the single greatest creator of Bitcoin maxis imaginable. I think that, and I've seen this, with some of my friends who know that this is what, I'm passionate about and aren't interested, don't care. And one of them a couple of weeks ago read an article on CBDCs and, was texting me, called me up, and he's like, I get it now. I get it. And I'm like, what do you mean you get it now? He's like, fucking government wants to see every transaction. They're going to know everything you do with every penny, every dollar. No fucking way. This stuff's crazy, and boom, like he really got it. And, then I put it in the context of Bitcoin and how this is different. And the light bulb went off for him based on reading an article about CBDCs. And so, yes, I think CBDCs are coming. I don't think that we're going to see a CBDC issued by the United States government in a traditional form. I think that they are very aware of the privacy laws and how that would potentially be a violation of it. I think we'll probably see some form of a stable coin issued by banks as they kind of laid out in their stable coin paper. There's a system in place where the banks kind of issue the new dollars, and I think they want to keep the banks, in the loop and playing their integral role. So I think it's likely to come about in that context.
Right. And going back to something you said earlier, I mean, just talking about Fidelity, it stuck in my head a bit. I mean, recently they just came out with, I think, price targets for 2030 and 2040. I'm not sure if you saw these.
I didn't.
Okay,
I don't look
2030.
at price targets. Yeah.
All right. I hope these are verifiable. I Googled it quickly.
Okay.
I saw some headlines that verified this, but I think it was like 2030, they had a price target of 1 million per Bitcoin. And by 2040, and some headlines I saw use 2038 to 2039, 1 billion per Bitcoin. And
I like those numbers.
It's interesting. It's interesting that Fidelity is behind that. I'm going to Google that after the show, make sure I'm accurate there. And
I hope they're right.
Sure. And even if they're 1 or 10% or 50% right, and then coming from Fidelity, it's like when guys like me or us, or we say that, I think it kind of can come out of left field, but
there's an inflection point. I mean, if you think about it, if you really think about it, there's just not that much supply. And when it starts to go, it could easily go to those numbers, and very, very quickly. I mean, how high does the price of something go when there aren't any sellers?
Right. I have a show coming out soon with Luke Mikic about this, and just looking at the numbers and the multiplier effect, and the amount of fiat out there, and very interesting and fascinating. But I did see a picture of you with a full node sculpture from Fractal and Crypt.
Yes.
So can you tell us the story behind that, and how much joy is that bringing you?
It's bringing me a lot of joy. The artist, has become a buddy of mine. I actually saw him a couple weeks ago in Miami. He's super talented. I saw the node sculpture after he had after 1, 2, and 3 had gone out, and he had planned to auction off number 4, and then I was able to reach out to the artist and make a deal with him for numbers 5 and 6 for Michael and myself, and it was great. He had a lot of fun. He got to come and deliver the node sculpture to Michael personally, who loved it. And really, if you love Bitcoin, it's just an absolutely spectacular piece of art. I get tremendous amount of happiness from it.
Yeah. Wow. It must be something to see in person. I think I got to see it at Bitcoin Miami. And
that was mine, actually. I loaned him back mine to put on display because he didn't have one to display. So
right.
But next time you're in Miami, let me know. Come on by the place and check it out.
I just moved to Florida, but on the West Coast. But
okay,
talking about
welcome.
Yeah, I think Florida is the best state to be a Bitcoiner, and it's got freedom, sovereignty, sunshine, and it's really close to America. But as two former New York and New Jerseyans,
Yep.
I mean, what about Miami is it for you?
Yeah, I mean, I think that increasingly state politics are becoming more and more important in the United States, and we're seeing more and more division. And I love New York City. I was born in Manhattan. I lived in Manhattan for 28 years. It'll always kind of be home, but I'm really happy in Miami. I'm a big believer in the fact that if you can live where other people vacation, it's kind of like an awesome life hack. So super happy about being in Miami. Great culture, great restaurants, got good friends there, and it's a little bit Bitcoin central. And then somewhat coincidentally, it's where I discovered Bitcoin. So that's always kind of cool and nice. But I love it. I love the beach, love the sun, and it's nice that everybody in the Bitcoin world comes through at some point.
Right. And then playing chess, I think that's a big part of your relationship with Michael Saylor.
It is.
Where are you guys in that, and how big a part of your life is chess, and what kind of function does it
Uh,
provide for you?
he just beat me just before we hopped on our podcast. He just beat me. I'm still a little pissed off about that game. I made a little blunder, but we play just for for fun, but we play often. And I think what we both love about chess is we we're really focused on our professional lives, and it's a little, I don't want to say it's all consuming, but it's high level of focus. And when you're competitive, not competitive in the sense that you're really good, but competitive in that you don't like to lose. When you're playing chess, you have to really focus, and it's almost impossible to be thinking about external things when you're focused on chess. So in that sense, the fact that it captures all your attention and takes you away from the other stuff for a period of time is really beneficial.
Yeah, I've noticed it's become a really big. I mean, I was at Bitcoin Day Naples,
Yep.
Naples, Florida, and there was a chess tournament. There was one in Austin, a Bit Black Boom.
Yeah,
It
I
seems like
saw.
it's a staple of Bitcoiner life now.
I mean, I think that chess is a pretty cerebral game. And I think Bitcoiners are pretty cerebral. So maybe there's some connection there. Um, I also know anecdotally that the folks at FTX were big Bitcoiners, so maybe I wouldn't put too much onto it, but I were big chess players, so maybe it's not everything, but yeah, it's a great game. We have a lot of fun with it, and we even like have Michael's got a big chessboard at one of his homes, so we'll play outside, kind of standing up, and he's even has like some really heavy pieces on one of his chessboards, so we get a little bit of a workout moving the pieces around. So it's fun.
Right. And then to roll out, I mean, can you be responsibly, irresponsibly long Bitcoin?
Yes. Yeah. I mean, I think everybody's investment situation is different. And I do think that one has to have an appreciation for the investment time frame for an asset like Bitcoin and understand um, if one cares about the fiat price swings. But for those that are looking with a much longer time frame, I think you can have you know as big a position as you like. I'm not a big advocate of leverage in general. So I don't ever advocate for people employing leverage or borrowing, but yeah, I'm irresponsibly long, and I wish I were more so.
Maybe what is the like? What do you think about the risk adjusted basis today versus when you got involved in 2013 or even 2016?
Oh man. Yeah, it's totally different. I mean, the big risks are off the table. Truly. The US government banning this is off the table. That was the biggest risk. Is this going to be taken away from you like by force somehow? I know it can't really be in Bitcoin's like, but believe me, the United States government, if they were to make it illegal, could make it incredibly difficult for people to hold Bitcoin. So the fact that that's not the case, and we have politicians on our side who understand it and believe in it from both sides of the aisle, fighting for it. And by the way, because it's a commodity, politicians can stand up in Congress and advocate for it. If it were a security, like a stock or something, they couldn't. So that's a huge win for us. Yeah, and I think this digital property is going to be fine and it's going to thrive. It's not to say that there aren't risks and there aren't going to be ups and downs and good days and bad days, but I think all the pieces are in place for this to be a very, very valid store of value and hope for a lot of people.
Yeah, I hear you there. And so my final question to you, and I know, people have to orange pill themselves, but if you could orange pill anyone in the world alive today, if you can get a week with
Yeah,
anyone, who would it be?
man, that's a good question. I mean, I guess you just go for the most powerful person in the world, right? I mean, so I guess a sitting president of the United States at the beginning of their term, ideally, um, would probably be best. A lot can happen in one administration. So Who knows?
Well,
The president of the United States loved Bitcoin and started issuing Bitcoin bonds and, raising trillions of dollars to buy Bitcoin. That might put the U.S. on a Bitcoin standard. Be good.
well, you're the guy to do it. So,
Thanks, Ed.
Eric, this has been awesome. So dope. I appreciate this so much. I'll leave it to you for any parting words and let people know where they can find you and your work.
My pleasure. Thanks so much for having me on the pod. I really appreciate it. Keep up the great work. Twitter is probably the only place I really am. I think my Twitter handle is Eric_BIG, Bitcoin Investment Group Fund. So Eric_Big Fund.
Awesome. Thank you so much.
Thank you, man. Really appreciate it.
Thank you so much for checking out this episode. Again, make sure that you're subscribed to the Bitcoin Matrix podcast so you don't miss out on any fresh and new dope content. I want to thank Eric Weiss for taking the time to come on the show. I also want to thank our sponsors, River Financial and CoinKite, for powering the show. Big up and much appreciation to those of you who are streaming and boosting the podcast for sats on the Fountain app. Fountain legend Eric99 boosted us 50,000 sats on the Luke Mickett show and wrote, "Stay humble, stack sats." Hurleybird wrote, "Just found your podcast on Fountain. One of the best. Keep up the great work," and boosted the show with Luke 12,000 sats. Tesla Liberty boosted the show 5,000 Satoshis with Luke for the bull vibes. Thank you so much, my friends, for the precious sats and kind words. It means a lot to me and my family. Tur de Meester, Greg Zaj, Clemenza from the Meat Mafia, Joe Burnett, Eric Kaysen, Luke Broyles, and Gary Leland are all up next. In a world of ones and zeros, are you a zero or the one? Fiat is a thing of the past. Bitcoin is the future. This is Cedric. Peace.